First point, we have looked at that currently as managers, business managers, we are concerned about looking at how, okay, we are concerned or we are expanding our scope of management accounting, and that we are able to look at the cost per unit. And I've given an example that if you are considering a scheme, we look at how much cost do we incur to produce one particular student. And with that particular summation, it actually guides us that, for example, if today you came and requested for a unit or a course and you are the only candidate, we are likely to request you to be patient. We look for other candidates or students so that you raise quorum so that we can start off the class. And whatever is directing us or leading us into that, we are looking at how much cost do we incur to produce that particular one student. So if at all you are coming and you'll pay 30,000 in a whole 6 months, yeah, and we accept to train you, we'll pay much in terms of salary to the teachers. We'll pay much in terms of electricity to supply to power the class and all that. So we look at those costs that will incur just for that one particular student. So in that case, we can use management accounting to make decision that is it viable. So in that case, we are expanding and we are looking now at activity-based costing, that we are not just looking at the class per se, we are also looking at how much are we going to incur. If you are to procure, let's say, a product, let's say if you are to buy a product from a manufacturer, and the manufacturer will look at the quantity you are procuring. So if you are told that quantity cannot pay the cost of transportation, then he will also request you to pay for transport cost, for instance. So in that case, he's also looking at activity based. But if you buy a certain quantity and he feels he has made some significant return from that, then he can offer you free transport for that particular product. Then the second part we are going to look at is that management accounting is also expanding role with enterprise performance management. Then now, when you talk of enterprise performance management, we are talking about the integration of multiple methods such as strategy map, balanced scorecard, performance measures. Now that when you're looking at let's say at our employees, we don't just look at employees and what they are doing. We can also evaluate where the inefficiency is coming in our system. So in that case, we are doing the strategy maps. When you create those strategy maps, you are able to identify where we are likely to see the loopholes within our system. We are also likely, we can also look at the balance scorecard, that we look at what has our employee done. Let's say at the end of the month, we can ask our employees to evaluate what they have done, what they have achieved, and what they have not achieved. Then we can also look at the performance measures. So how do we measure how our employees are performing? How do we ascertain and say employee X has done better than employee Y? So in that case, we will be employing the enterprise performance management, that we can apply the management accounting into evaluating how the business perform, how our employees perform, and how our machines or whatever commodity we have put in place, how they are performing. Then number 3, we also have a shift to predictive accounting, that there's a gap. The gap is widening between what management accounting reports and what managers and employees teams want. That at times, whatever we are looking at, when you are reporting about management accounting, for example, when you are making budgets, those budgets could okay, they could shift. There could be a shift. There could be a gap from what we want to achieve and what the budget requires us to achieve. So at times, when we prepare a budget, we can estimate, let's say at KIM, that we require to get 300 students. Now, for 300 students, if each student is paying 30,000, then automatically the budget we can predict to that we will collect 9 million. But now that's not what will happen, because we know as much as we have budgeted to get 30,000 per student, then out of the 300, there are a number of students who get themselves in trouble here and there, and will also surcharge interest or penalties. So when you surcharge, then it means that some of those students are going to pay more than 30,000. For example, if at all you not pass your examination, then it means you'll have to sit for you'll have to sit for supplementary, of which will charge you a cost of about 2,000. Or if you sit for your examination, there are chances that some of you will forget to write your admission number either in full or in part. Then in that case, because you have made an irregularity, for us to rectify that, you'll have to pay 3,000. So in that case, there's a shift that how we could have estimated we will make only 9 million, but now we end up making more than 9 million, or still we can also make less than 9 million, that the 300 students could have enrolled, but when we get closer to the examination, some of them decided to defer the exam and say they cannot sit for that exam for some reasons or other. So in that case, it will also mean that now we will not consider that as our revenue for that particular period until when those students come and sit for the examination, then we can consider that actually they paid for a service and we have offered the service. Then number 4, we have business analytics embedded in a enterprise performance management methods. That nowadays we have big data in our system. We have big data in our organization. Now, this data, we can actually embed it in our system so that we can actually tell, what is the contribution of a particular employee, or what is the contribution of a particular department, or what is the contribution of a particular machine, or what is the contribution of a particular branch towards the achievement of the whole organization, so that we don't get the joyriders within the organization. That if at all we have to reward performance, then we are only concerned about performance, and we are only going to reward those employees or departments or branches which are performing. We are not going to reward anybody in blanket. Get it? So in that case, we can embed those tools, analytical tools, so that it can tell us that once you key in, for example, if I have to teach you, once I key in, I start teaching you, the system can record that this lesson has started. This, at the end of the lesson, it can record how many students have attended this particular lesson. So in that case, we are able to tell how our lecturers have performed, and in that case, we'll be embedding those performance towards whatever their activities they are undertaking. Then the next tool, the next area where management accounting is also expanding, we will, number 5, that's coexisting and improved management accounting methods. That we have other methods which are improving how we evaluate our management accounting, and some of these methods that are actually improving is activity-based accounting. Now, when you talk of activity-based accounting, we have done this remember when we did when we were computing labor costing, we used whatever we applied is what we are referring to activity-based accounting. Remember, we looked at a scenario where an employee is supposed to be paid per month or per duration, then he's also supposed to be paid a commission for the units he produced. Then we also did a comparison that if we use our own employees to work for overtime, or if we get additional employees or get other employees from outside to serve what would have been an overtime for our employees, then we made a decision. So that was an example, a prime example of activity-based accounting. That now, currently, we don't just rely on management accounting on its own. We can also look at other areas that that work in tandem with the management accounting, and that's the activity-based accounting. And number 6, we look at management information technology shared services as a business. That it's human nature that when something is free, one doesn't care how much one consumes, whatever the item or service may be. That today, if we give you a free service, then it does not matter how much it costs or how much you consume. For example, if this lesson, if you are not spending data bundles, then, and I asked you to extend this lesson up to 10, then most of you will not mind. Most of you will be around. But because it's also consuming data and you have budgeted on the amount of data you can have or you can use, then you know at most by the end of the lesson, either you have exhausted your data or it will be clear near exhaustion. So in that case, you may not allow us to extend even further. But now, if it was free, then it means that you can consume as much as you wish, and no one will be concerned. The same way, let's say water. If at all you are closer to a river where a free flowing river, you can go there and wash your clothes, swim, and do whatever you want to do with that water, and nobody will bother about it. But now, if you are staying where you have to pay water bills and those water is being rationed, then nobody will allow you to use that water the way you want. So there will be some controls. So in that case, we also have to introduce management information technology in some of the shared services so that we can control. And this happens, for instance, because in organizations, we can't control how much photocopies one can make. We can't control on who should make photocopies and all that. Mostly, most organizations, when you go there, you will find they have this big photocopy, and that photocopy is it has management information technology. That photocopy, for you to make a photocopy or to print, you must key in your password. You must key in your password for it to accept to print. So in that case, because that machine is there and is serviced by organization, there are chances that if I get any document on email, I'm likely to send to that particular printer. So, and sometimes I may send to that printer. If it doesn't have paper, I go there, I don't find it, papers, because there are no papers, so it didn't print. So it will just keep on holding. So when somebody comes with papers, when he put in, it will first of all print that, and I will not be available, and they cannot trace who actually printed that particular information to take those papers to him. So in that case, it may result into a lot of waste. Now, with management accounting, we have to introduce management information technology. Like now, that photocopy, I've given an example. I believe for some of you who are working in offices, you must also have used that particular kind of machine. That if you want to make a printout, as much as you'll send a printout from your computer, you have to go to that particular machine and key in your password for it to print. If you don't key in your password, it will not print. So in that case, it puts in some controls. The same thing, some of you could also have gone to some offices where when you get in, you must put there your thumbprint. Then the door opens. So in that perspective, then there are controls that organization is put in place so that we are able to control the costs of running the business. The number 7, we have the need for better skills and competency with the behavioral cost management. That because we need better skills, because the businesses, as business managers, you need better skills. How do we manage their businesses? How do we manage the behaviors of cost? But any activity that you undertake in your business, any activity that you engage in your business, it will result into a cost. Now, in that case, you require management accounting so that you increase your skills, you increase your conscious when you are managing the costs or when you are undertaking any activity. For example, there are some of you who within your organization, you have been allowed, you can request, let's say for Uber, depending on the level you are serving, you can request Uber, and the ticket, okay, the Uber will be paid directly by your manager, or it will be paid directly by your organization. So the bill will go directly to your organization, not necessarily you. So in that case, some might result into misuse. That any time you want to go out, you even where you can walk, you will request for Uber. Anywhere you want to go out, even where you can use a matatu, you would like to use Uber. So it may result into misuse. But now once you have learned management accounting, you can now put in some controls, because you have skills, you can put in some controls so that you are able to manage the cost of running that particular business. So other than that, we also want to look at other things that are also associated with management accounting. Then one, we start off by looking at the balanced scorecard. And the balanced scorecard is a strategic planning and management system used to align business activity to the vision and strategy of the organization by monitoring performance against strategic goals. That, if I give you an example, an organization like Kenya Institute of Management, because we have several departments, we can align and see what activities do we actually associate with a particular department. Let's say for teaching, we look at the lecturers, then we can look at what are the activities that we can actually evaluate and say the lecturer have performed to their best. So in that case, we'll be looking at how have our lecturers attending to classes, how many students are attending to classes. We can look at how syllabus is covered and all that. So in that case, if we consider those as the key areas where we can evaluate lecturers, then we'll be having a balanced scorecard so that we don't evaluate a lecturer, for example, by the number, let's say, of marketing activity. We don't evaluate a lecturer by the number of students he has brought in from outside. Because if we do that, then it means a lecturer can leave a class and go to attend to marketing activity. So the reasons why we need to use the balanced scorecard: one, to improve organizational performance, and to improve organization performance, when we strategically align our employees to particular activities, we avoid instances where, let's say, a lecturer missed a class because he had gone out for marketing, whereas we have a marketing officer, or we have a lecturer who has missed class because of some of the reasons that, okay, was because he had to attend to a particular assignment that he had been given by the management, yet there was somebody who would have done such an activity. So now when we have a balanced scorecard, the lecturer will only look at the areas they are supposed to focus on. So in that case, we can improve the performance of our organization. Number two, we increase focus on strategy and results. That because you have a particular area where you are supposed to perform, then we are all likely to focus. You just focus on those particular areas. So in that case, we can also focus and look at how we improve on our results. Then another one, we have to align organization strategy with workers on day-to-day basis. That once you have put in the balance scorecard, then we have our employees. Each employee has whatever he is supposed to deliver on our organization. So in that case, it gives us very ample time that we can evaluate, we can align our organization that this is what we want to achieve. We have employees who can focus on those particular areas to assist us achieve, so that we don't have scenarios where an employee was tackling on a particular activity, was dealing with one project, he has moved to a second project, the other project is not complete. So at the end of the day, we have so many projects that have been initiated, but we have none that's complete. If we have a balanced scorecard, then we have an ample time. We can actually complete the project to the latter. And then we can also focus on the drivers, key future performance. That once we have a balanced scorecard, then we can make a long-term plan. We can make a long-term projection or long-term plan. Now, with this long-term plan, then we are able to evaluate and see how we are actually going to perform better in the near future. Then you can also improve on communication of organization, visions, and strategy. That if we have a balanced scorecard, then we are only going to communicate to you what is relevant to you, that every department has whatever it needs to achieve. Then if we are formulating our communication, we only formulate a communication that can pertain this particular organization, this particular department, this particular branch, that if a particular branch is entitled to is supposed to generate a certain revenue, then we can actually tailor our communication towards that, so that we fine-tune that particular department or that particular branch to deliver what it needs to deliver. Then you can also prioritize on projects or initiatives. That when you have a balanced scorecard, we can prioritize. We can say what can we achieve, what do we need to do. For example, you'll be doing your examination in next 3 couples of weeks. Now, as you prepare, then you also have to align yourself. You have to give priorities. What can I do? What should I revise first? What should I revise next? Depending on how you have evaluated your strength and weaknesses. So the other parts I will score about a balanced scorecard. I'll skip. I'll let you read through it. The other part is Kaizen costing. And Kaizen, this is a Japanese company. Okay, it's a Japanese company and it's used in manufacturing. In manufacturing of existing products, and it reduces the cost, cost of production. So the Kaizen is was formerly or was implemented by a Japanese motor vehicle company that makes motor vehicle. Now, it looks at how to produce, and as we produce, we have to reduce or to manage the cost of production, so that we only produce what is required. We only produce what we only produce what is required on the market, so that we don't overproduce, and then we incur cost of storage. We don't produce more than what is demanded on the market. We don't produce what we can't sell or what we can't dispose. So I'll give you the advantages of Kaizen and the disadvantages. We'll go through it. So the third one is target costing. And target costing, generally achieving a target cost over entire life cycle of a product to compete for the best price in the market. That most organizations, when they come up with a product, they know they will incur a particular cost to come up with that particular product. And once you have made that particular product, then as we take it to the market, then we expect it to sell and generate revenue from that particular product. Now, as we generate revenue from that product, then we have to see, are we going to generate adequate to pay ourselves? For example, if today Kenya Institute of Management introduce a new course, and you have to join that new course, yes, then we can look at how many students have actually registered to join that course, how many students are paying for that particular course, how much are we collecting from those students, and how much money are we paying to the lecturers, so that we manage the actual cost that we incur to that particular class. So we are able to reduce costs or manage that particular cost in that particular area. The fourth part that also management accounting is concerned is life cycle costing. And this refers to the process of identifying and recording all costs that are incurred over the entire life cycle of a product. And this includes cost incurred before the production of the product till the cost incurred for the disposal of the product. That, for example, if today you are to buy a phone, there's cost that you will incur before you buy this phone. You first of all start looking at which phone is the best. What do you want to use this phone for? Do I want just for chatting? Do I want a phone for communication? Do I want a phone that has good camera? Do I need a phone that has long battery capacity and all that? So now you'll go out to do window shopping. So as you go to window shopping, at times you'll pay fare to take you to the nearest town or to market or whatever. So you'll have incurred cost before you buy that particular phone. Now, once you have bought off this phone, you have to use it, you'll have to maintain it. and there's a cost. You'll have to pay airtime and all that. So you to maintain this particular phone. Now, once you have used this phone to the end, now it's not it cannot serve you. It cannot serve you any longer. Now you'll have to dispose it. In that case, you look at how much are you likely to dispose. Likewise, if you bought, let's say, a motor vehicle, you could have bought a motor vehicle at 500,000. Then you'll have to use this motor vehicle. You'll have to keep it, servicing it as you use it. Now, when you decide you want to upgrade, you want to buy another motor vehicle, a latest model or whichever that will cost 700,000. Now you have to sell off this motor vehicle. So you look at it, we look at the cost. How much did you incur to do window shopping to find out this motor vehicle that you want to buy? How much money did you incur to evaluate this motor vehicle to see if it's roadworthy and all that? How much do you incur to ascertain this motor vehicle if it can serve you for a longer period of time? So you'll get a mechanic or a valuer to do all those valuations, so you'll pay that cost. Then you'll go in, buy the motor vehicle. Once you've bought the motor vehicle, you'll consistently require to buy insurance, to fuel, to service that motor vehicle from time to time, washing that motor vehicle. So those are the costs that you'll be incurring. Now, when you decide to dispose of this motor vehicle, then you'll evaluate how much money are you likely to raise, or before you dispose of, how much money do you require to put in so that you refurbish that motor vehicle so that it can fetch you as much money as possible. So in that case, that's what you're talking about, product life cycle. So in that case, we are concerned about the cost you incur before you acquire an asset, the cost you will incur to maintain that particular asset, and the cost you will incur when you want to dispose of the asset. And then number 5 is benchmarking cost accounting. Now, when you talk of benchmarking, it's a process of improving performance by continuously identifying, understanding, and adopting outstanding practices found inside and outside the organization. That when you talk of benchmarking, we are doing a comparison. That, let's say, between Airtel and Safaricom, which is most expensive line? Who can assist us between Safaricom and Airtel? Which is more expensive?
Safaricom.
Safaricom is more expensive. Now, Safaricom can go and compare with the Airtel. What is making Safaricom to be more expensive or Airtel be cheaper? So that they can also reduce on the cost and they become cheaper. But now, in this case, as much as Safaricom is more expensive, which line attracts more customers? If somebody was to sell you Airtel and Safaricom, which one will you choose first? Anyone? Dixon? Well done. Between Safaricom and the Airtel, which are you using frequently?
Airtel.
Airtel. Also, Dixon, well done is using Airtel. Triza? Which one do you use more frequently? Alice, Kaita? Between Airtel and Safaricom, which one do you use more frequently? Or if you can look at your incoming calls, which one have you, for Alice, you use Safaricom mostly. So you find that as much as we know Safaricom is more expensive, but there are some reasons that will propel us to use Safaricom still, because of the stability of network and other services that they do offer. As much as Tcash is free to send to any network, but we still use M-Pesa because there could be, or there could be some challenges that will be are associated with the Tcash. So in that case, we are concerned when we conduct benchmarking, we are comparing what other organizations are incurring in terms of cost. Then we can also compare probably wherever they are sourcing or their procurement process is much simpler, so they are likely to get materials at a lower cost. So you read about advantages and disadvantages of that. So we look at activity-based accounting. And activity-based accounting is a methodology for more precisely allocating overheads to those items that actually use it. And I gave you an example that when we conducted, when we were doing labor costing, we used activity-based costing. That's an example of activity-based costing. That all those expenses that we came out with, we were associating those expenses to a particular product. That because we are producing this particular product, then even any cost, all costs that are incurred for that particular product, then are the only ones that we consider when we are accounting for that particular product. So that if you are doing business management, then we can see how many lecturers are attending to you. So in that case, we look at the cost you are paying to those lecturers and say that cost is what we are incurring to support the business management. So in that case, we are able to tell how much money are we collecting from business management and students, and how much money are we incurring to support that particular unit, business management. So in that case, we'll be using activity cost accounting. So advantages and disadvantages we'll go through. Then next, number 7, we have strategic cost management. And when you talk of strategic cost management, is a program established business use in order to regularly identify and analyze cost drivers to lower cost and minimize total value. Now, when you talk of strategic cost management, that we look at it, which are the areas we do incur much cost. Now, once we have identified the areas that we incur much cost, then we can put in some controls so that how do we control this cost? For example, at Kenya Institute of Management, if at all we are incurring huge cost on transportation, then you can look at it, how do we control this cost of transportation? And probably you can come up with a driver, a van, or we can come up with a bus, so that if we are transporting so many people and we have to pay them the fare to move from one place to another, then we can come up with a bus or a van that easily will easily transport our employees from one location to another, so that we reduce on that particular cost. Or if at all our highest cost is paying for house allowance to our employees, then we can identify a particular plot, develop that plot, and come up with the staff quarters, so that our employees stay in a particular staff quarter, so that we don't have to incur that particular cost. So you read about their advantages. Then we have a human resource accounting. Now, when you talk of human resource accounting, it's a branch of accounting, and it deals specifically with human resources. But in an organization, we'll have employees. Those employees, how do we account for them? How do we look at the value of those employees? How do we make sure that those employees can produce at an optimum level? So in that case, we will be applying human resource accounting. That if we have to evaluate how much do we pay you as a salary, and we can also compare how much are we generating from you. So if we are paying you salary as a receptionist, then we look at it, how many employees are satisfied. Are you able to satisfy all our employees, so that even the person who was just coming to make an inquiry, we can convert that into a sale. So in that case, we'll be applying human resource accounting, which is a branch of accounting. So I'll let you read the other advantages and the disadvantages. Then the next one is just-in-time system. And when you talk of just-in-time system, it's an element, it has the element of philosophy as well as various practice elements. That just-in-time, and this is an element, again, it's used in Japan, that rather than, let's say, Kenya Institute of Management having a store where we can buy, let's say, materials, stationery, and stock in our store for a very long period of time. In that case, we'll be incurring cost, storage cost. Remember, those materials, any accident can occur. Either they can catch fire, water can spill on them, and they get destroyed or damaged and all that. So, or the theft is stealing by servant. Employee can go to those stores and get out some materials for personal use. So in that case, we'll have lost out. Now, when we apply just in time, then it means that we have to get somebody or a supplier who is very reliable, that if at all today we require 10 full scalps, he can deliver those 10 full scalp. If today we required 10 pens, he can deliver those 10 pens. That he will deliver whatever we require. We'll only make orders of what we require, and they will be delivered when we require it, so that we don't have to incur cost of storage. We can save on cost of storage because we are receiving whatever was supposed to be supplied to us when we require it. Then the last part we look at is the theory of constraints. That the theory of constraint was developed by Eli Goldratt and originally presented in a novel entitled The Goal. So you can read that novel called The Goal. So now, when you talk of the theory of constraint, is similar to just in time, that it has element of philosophy as well as a practice. Now, this philosophy is applicable to any type of organization, while the practice element apply mainly to companies that produce products to customer specification. That when we talk of theory of constraint, that it's considering a product that you must make order for us to produce for you. That if you go to a particular, let's say a restaurant, you have to make order what you want, then we'll produce for you what you want, the way you wanted it. That you not, the restaurant will not just produce so many items, so many goods, and put on shelf that you'll be just go and request for them, but whatever you require. So, for example, if we talk of chicken flavor, there are so many areas, ways we can prepare. Somebody will be interested with the roasted chicken. Another person will be interested with the boiled chicken. Another one with chicken stew. Another one chicken tikka. So those are various varieties of chicken that you can come up with. So in that case, some of the restaurants will only have the chicken available. But once you come in and make order and say, I want a roasted, then they roast for you. So they'll only request you that you have to make an order and wait for about 30 minutes or thereabout. So once you make order, they prepare for you whatever you have made order, the way you have made the order, so that they don't have to roast, let's say, a number of chicken, then they don't sell all of them. So they only prepare what is what has been requested for, so that they satisfy you as a customer. So that's what theory of constraint is all about, that you only request and they will only produce what you have already requested. So I've brushed through this particular part because I had given you as part of your work-based, though I found out that most of you had not given so much information, so that's why I had to review it. Any question pertaining to what we have so far discussed? Anyone with a question or concern on what we have discussed so far? Edith, any question?
Personally, I have no question.
Well done. Hilda has no question. Well done. Kibet.
No question, sir.
Okay. So Edith, I will send you the notes. You'll circulate what you have discussed and you'll circulate to the class members.
Okay.
So next week, I know we will not be meeting because it's a public holiday. But the following week we'll meet physically. There's only one topic remaining that you can also brush over, so we will not be in a rush. So we'll meet after next week. It's only one topic we'll brush over, and then you will be good to sit for examination. So if there's none, who is closing for us the meeting?
Jordan, I have a question.
Yes, go ahead, James.
Can you? I'm seeing it like you are recording.
Yeah.
Can you share with us? Maybe
No,
for the sake of those who joined in late.
no, okay. You'll check on my YouTube because it's usually huge volume, in a huge file. I cannot
Okay.
share via WhatsApp.
Yeah.
Yeah, so but you can check on my YouTube. I'll upload it on my YouTube.
So it's your YouTube channel is Jordan Mulamba.
Yes.
Okay, sir.
So, okay. So, in any other question, or if there's none, or somebody to close for us the meeting?
Let's say the grace.
Okay. The
May
grace
the
of
grace of the Lord Jesus Christ and the love of God
and
and the fellowship of the Holy Spirit be with us now and forevermore. Amen.
Amen.
Success, everyone. Bye.
Yes, have a wonderful evening.
The next step consists of creating a common understanding about the intended change. How will the situation look like when the problem is solved? So we have a method of Bio has two methods for reaching a consensus of the intended change. Preferably, both of them are used. We have the visual